Hey everybody, this is Jason Rivera again from valueinvestingjourney.com and author of How to Value Invest. Today, the topic of conversation is some of my investment learning failures and as it pertains to maintenance capex and owner's earnings. I talk about quite a bit about my some of my failures, my previous failures in my book, How to Value Invest. Um, but this is one of my more recent and continuous failures as a value investor. I first heard the terms maintenance capex and owner earnings probably 5 or 6 years ago when I first started learning about investing and found csinvesting.com. And couldn't comprehend it at that point because I was still learning the terms and um, things like that. Um, but now, and every once in a while over the past 5 or 6 years, I've looked at maintenance capex and owner's earnings and how to calculate that, and not still been comprehending it, or I've been just kind of blowing it off because I wanted to learn other things. For example, when I took off an entire month to learn about insurance companies. But this is something I've recently rectified, finally, after 5 or 6 years, is the concept of owner's earnings and how to incorporate that into my company analysis. I hope to, right now I'm working on a company that appears to be undervalued, has competitive advantages, and looks to be an overall good to excellent company, and one that I'm potentially thinking about buying into but I have to finish up my research first, and hope to show you what I've learned in that area and along with other areas that I've been learning about as well. Topics like return on capital employed, unlevered, tangible equity to assets, I believe is what it is. I can't think of it off the top of my head. Things like that, just how to think better about topics like goodwill. If you follow this blog or read my book, you know that I've pretty much always been against even a little bit of goodwill because it means that the company overpaid for their acquisition. My thinking after reading all of the Berkshire Hathaway Buffett shareholder letters has changed a bit on this topic, and I hope to be talking about that soon. The term of that is economic goodwill, which differs from just regular accounting goodwill, and I will hope to write a post or show some links about what I've been learning from on that at some point here in the near future as well. But in the meantime, while I'm working on that company analysis article and researching their competitors and getting all their ratios together and making sure that they're a above board good company that I want to invest in for the portfolios that I manage, I've decided to drop the price of my paperback book, How to Value Invest, from, I believe I had it $39 or something like that, down to $12.99, just to get the book in as many hands as possible. And I will either tomorrow or the day after, whenever Amazon lets me, I'm going to set up a sale on the Kindle version of my book, which will be free for the coming 5 days, I believe. After the sale starts, I'll let you know when the sale starts. But like I said, I want to get the book in as many hands as possible. I've sold actually more copies than I thought I would up to this point, but book sales have stalled recently, over the past month or so. So I want at this point to get the book in as many hands as possible to help future investors learn as quickly as possible. I've had great feedback from the book, as can be seen on Amazon's reviews, or I've listed some of the testimonials and reviews on valueinvesting.com or valueinvestingjourney.com. So the book's gotten great reviews up to this point. And like I said, I just want to get it into as many hands as possible, and as a bit of a thank you to the readers out there who might not be able to, who want to buy the book but might not be able to afford the book, especially people in other countries, because that's about 40% of my book sales have come from at this point is people from overseas, and some of those I've gotten emails from other readers saying that they live in certain countries and they can't afford it. So that's another reason why I'm putting the book, the ebook on, or the Kindle version on sale for free over the coming 5 days after the sale begins, which again, I will let you know when the sale begins, according to when Amazon says I can put it on sale, and have permanently dropped the paperback book price from around $39 to $12.99. Alrighty, talk to you guys again soon. Thank you.